Good morning, everybody. Today is November 21st at 9 a.m. New York time, and today we're going to be going over an update of our stage analysis and also looking at a little bit more of the on-chain since there is a bit of an update since yesterday's video. And we're also going to be reviewing the SPY since we started seeing that breakdown of that stage 3 presenting itself. So first off, where are we from yesterday? So yesterday, we had a bounce off from the SPY. We saw that price was starting to rally up. We saw some small caps put in some pretty good gains in the 100%, 300 or 30s. So the small cap alts were looking pretty good off that bounce, but we could see that it did not hold, and we had another high volume close below that major support, that 90K. We talked about. There was a liquidation area, which I can show on another chart, of this 80 to this 90 to 80K range. And we said if it loses this 90K, that we can see a cascade up to the 80K range. And if you look at that, we bounced right off of that 80K, right off there. And when I show you some of the on-chain data for the liquidation area, you'll see that it played out exactly like we talked about. I'm not saying that I'm a genius. I'm just saying what we observed on chain and the price action reflecting that, because it makes sense that if everybody gets liquidated and then there's going to be a bounce because all those shorts or all those longs get liquidated, and now we're basically resetting itself. So from that 80K, so we could see that. Still another high volume day. Previous day had a 52-week low. So the S&P pair strength, so the Bitcoin to S&P pair strength, we had a 52-week low. I'm seeing some people talk about the RSI and saying that, oh, well, because the RSI, the relative strength index, is below, it is touched where other periods of time where it is bottomed out, that this is the bottom. But the thing about pair strength is that when you're putting in these 52-week lows, for example, and this is a custom indicator that we use inside of our crypto trading platform, but when you're putting in these 52-week lows, this is showing that momentum is to the downside. Momentum, if maybe you've heard that greed knows no resistance and fear knows no support. So when things are going bad and things are speeding up, it can quickly, to the extreme, shut down. And there's some things that might indicate that we can still continue to go lower based on some of the on-chain data, which I'll show in a little bit. But right now we are continuing to go into the stage 4, and of course, what we're looking for is this late stage 4 sign. So down 50 to 80% from highs. We are not there yet. Forms a short-term consolidation. And if we were to get to that from the highs, 50 to 60, we're looking at the 60K range to where's the 80% lows. So yeah, like I said, we'd be looking at for late stage 4 signs. We'd be looking at around that 60K range to, man, if we were to go 80% down, we'd have to go quite a bit. 80%, so that 24. Do I think that we're going to be getting down to the 24K? No, I can't. It'd have to be a pretty extreme cascade to go down to 8. But could I see us going down to 60? Sure. Could I see us going down a little bit further than that? Potentially. I mean, we could pull up some support when we start going down there and seeing, start drawing where some support lines are and see where a potential bounce is. But we have to see where the general market is, because if the thing to be concerned about right now is if the S&P 500 is continuing its decline and it's just starting. What do you think about one of the leading indicators of where the market is, which is Bitcoin? Bitcoin started its distribution back in July. This is supposed to be a risk-on asset where money is flowing into, let's say, Bitcoin first, leading the market, and then it will also turn first, leading the market. It's a leading indicator. It's the canary in the coal mine, as people like to say. So if we started our distribution back in July, and we went through this extended distribution period, and then until November 3rd, we started the stage 4 decline, and the S&P 500 is just starting to go into stage 3. This can continue to go lower for who knows how much longer. Everybody on, all the on-chain people, all the Bitcoin maximalists are going to say, oh, well, this is probably the bottom. This is probably the bottom. I can't imagine it going any lower than this. If the market is in distribution, they are not going to be putting their money into a risk-on asset. It doesn't make sense to invest in a speculative, a higher risk, higher volatility play when you could just be sitting in something that is more stable. So that just had to rant a little bit, get on my soapbox. But here we see we have not formed any short-term consolidation, and selling has not slowed down. Selling is just continuing to pick up. So let me show. Oh, so let's do the S&P 500. So while we're here, so S&P 500. Woo! Look at that. Holy moly, that is wild. That is what we call a bearish engulfing. Bearish engulfing. And on yesterday's video, I said, don't be fooled by this bounce. You'll end up as exit liquidity, because we started to see the distribution happening. We talked about it. We said, hey, distribution is starting here. We had a high close below the 50-day. This is, high volume close below the 50-day. This is not a good sign. This is the first time in this whole trend that we've seen that. And then we had a pre-market bounce. So speculative bottom fishers are coming in saying, we're going to buy it. We're going to buy it. We want to invest. You are exit liquidity. Like I said, you are the exit liquidity. And look what happened. Everybody said, oh, thank you for your money. I am going to get out of the market right now. And that's what they did. And they drove the price all the way down. I think we opened up above the 50-day right here, and then we closed. Yeah, we closed there. And look at that volume. Man, high volume. But they could definitely pick up. It can definitely accelerate, like we said. So we have all these stage 3 signs checked off. Let's see if we can update anything on here. So selling accelerates, volume rising or steady. I'd want to see this for a few more days. I mean, we just started this process. But yeah, we can definitely see that selling is accelerating. I wouldn't say that this is a late stage 3 sign. I'd say that this is that early stage 3 sign. Fundamentals still look good, but price action is deteriorating. Yeah, I mean, I would say fundamentals don't look good because everybody's talking about this AI bubble. But this one we might just have to remove this one for now, because fundamentally the market just doesn't look that good. But you could also say that I don't know. I don't listen to the news. So, stage 4 signs. Volume expands on down days even without news. I don't believe that there was any news. Again, I should probably listen to the news, but I don't. Now falling below the 200-day. We're not there yet. How far do we have to go to get there? Another 6%. That doesn't seem impossible. Lower highs and lower lows form. I mean, looks like we are testing this area of the support. So, and we bounced off of that. So bottom fishers stepping back in. Gotta love them bottom fishers, trying to catch a falling knife. And I imagine that this is just going to be more exit liquidity. So bounces happen on low volume, but sell-offs occur on increasing. Yeah, so that was a low volume bounce yesterday to the pre-market open, and then there was a high volume close. But again, we want to see this for a few more times. We just entered the stage 3, but again, we could also just go from a straight stage 2 to a stage 4. We've seen that happen before. Granted, hindsight's 2020, but there could have been some indicators that, hey, this is not good distribution, and we could have seen right here that this was an exhaustion extension. We were getting exhausted. Volume dried up, but we still kept trying to drive higher. And right here, when we put in this this when we weren't able to get the higher high, and we formed a lower high. That was like, okay, this is not looking good. And then we had some weak bounces, and then if you weren't out by this area, then this is a pretty clear indicator, stage 3. So that's why I was saying risk off. It's not a risk on environment. Bitcoin can continue to drive lower. So yeah, so let's look at some other numbers here. We have our MMTH. Or let's look. We'll go down the list. Russell 2000. So small caps. Ooh, that is not good. Look at that. Holy moly, that volume picking up. That is some heavy distribution happening. People are not liking this. Let's look at the VIX. VIX is spiking. We're in that high volume range right now. Pretty high vol. Could we go higher? Sure. We could go into extreme. I should probably color this area extreme. Yeah, maybe we'll change this color to dark red. We go dark red, extreme. So yeah, VIX not looking good. Looking at the stocks above the 200-day, we are now heading down. This is a pretty steep decline. We could see the pair strength indicator. If we were trading the VIX, I'd say that this is going down into the negative. So VIX could be increasing as the percent of stocks above the 200-day accelerates to the downside, as we can see. So yeah, so let's just go over some other numbers that we have. I'm just gonna roll through these really quickly. Bitcoin, like we showed, it's got a D rating. Total 3 ES, it's at a D rating. Nothing's changed. Triple confirmation for Bitcoin. This is what we use to be able to identify, the strength of the trend. The strength of the trend. If this was all green, we'd say it's good. But this is all red, so we can say that is increasing volume on the downside. The momentum is to the downside. If I was shorting, I'd be looking at this. Total 1, we're down 2 point. We're down to so total 1. That's the total crypto market. We went from 3.09 yesterday. Now we're at 2.85. Bitcoin market cap down from 1.8 down to 1.68. Ethereum market cap down from 363 down to 332 billion. Stablecoins unchanged. Total 3 ES, which is the total altcoin market, went from 614 down to 556. So about 50 billion left the market. Top 10 alts from 246 to 223, and then from top 140 alts from 215 down to 192. The coins above the 50-day, so if we just look at this, or the coins below the 200-day, we're down to 14.67. If we're looking at the momentum, so the relative strength momentum plays right now, yesterday we were at, I believe, 52, now we're at 38. Crypto fear and greed, we went down to 11. Yesterday we were at 15, or 16, I'm sorry. So now we're getting into uncharted territory of fear. So this is probably going to have to get updated to take into account some of that extreme. Top gainers, top losers. If we look at the top 100, I don't know why the top 100 is not showing right now, but top losers in the top 100, 2017, Pudgy Penguins, Dash, Arrow, Telcom, all these coins not looking good. If we look at the top 500, 40, 30. So we got some activity up from the small cap plays, but not very much. Very low, very low. And top losers in the top 500, 28, 20s. So higher losses than there are gains. All right, so let's look at some of the on-chain stuff. I said that yesterday we were talking about this liquidation event, and I'll show you from one of the other charts that I have what we're talking about. We talked about this a few days ago when we started to look at the on-chain data, and we said, hey, this is an area to take note of, this liquidation area from the 90K range down to the 80K range, and we could see almost to a T it bottomed out at that liquidation area that we identified at that around 80K. I think we could go a little bit further down to the 80. So bounced right off of that 80K, boop, and a bunch of people got liquidated. If you look here, this is what I'm talking about right here. We saw this was heavier in yellow. We had more of this color here. So this looks like this is the longs. So if price is above, if you're seeing that heavier, it looks like $105 million of longs here, or shorts, is how I understand this. So these are people that are shorting up here. If it bounces up here, then they would get liquidated. But we had a bunch of yellow, orange, stuff like that. That yellow blue below the price, which shows that those are longs, that if price continues to drop, then we could see the liquidation cascade like we saw yesterday. So while we're talking about degenerates, let's just talk about some of the on-chain degenerate stuff that we can continue to see. Bitcoin futures open interest. So this is how much people are paying for this is how much people are paying in the different platforms that they're using for this open interest. Hyperliquid being one of the most degenerate, but we also see that open interest on Binance, CME, Bybit, but Hyperliquid is pretty heavy as well. And we could see that just yesterday there was Hyperliquid took a big drop down. So a bunch of people got all those longs got liquidated, and so that's why we saw that bounce, because everybody got cut out. And we can also see how much that was liquidation volume. If we look at yesterday, maybe if I refresh this, it'll show up. I'll zoom in over here. So 230 million got liquidated. Yeah, about 230 million got liquidated yesterday. Today it's at 150 million. So we're speeding up. And if we look over here, this is what I was talking about. Of more people are starting to come in and trying to catch that falling knife. If we look over here at the aggregate volume, like we said, this is a futures heavy market. A lot of people are betting on the future of what Bitcoin can do, speculating on where it's going to go, and we can see that the market is primarily futures based, very degenerate. And we can see that they have not slowed down. Bottom fishers continue to walk in, and what I heard from James Check, listening to his show today, that maybe be like, oh yeah, he's right. This kind of validates what we're talking about. This is the psychology of how people trade. Is they try to catch a falling knife, they go leverage, they say this is the bottom, they're going to put all their money in, and then it continues to unravel. They get stopped out, and then they say, oh, I'm going to do it again, until the point where they say, I've lost my bags, I'm going to start shorting. And when the degenerates start shorting, that is usually the indicator of a bottom. Now, we'd want to look at maybe we can, in the future, another project could be relaying the looking at the stage analysis and comparing where degenerates are in relation to the stage, and if that, when they start shorting, if that is a good indicator of that bottom. We don't just want to cherry pick that one information, but we're looking in terms of stage analysis and on-chain on how that would, if that lines up. to use that as maybe a future indicator. But we can see the bottom fishers are still coming in and trying to catch it. They are not done yet. If we look over here, we can see that they're willing to pay more money for that bottom fishing. So we haven't gotten to the we haven't gotten to these bottoms yet. So over here we can see that the funding rate drops. So people are saying, I don't trust it. They're probably going short right here, thinking that it's going to go lower, and then they just bounce right back up. So we haven't seen that yet. We've seen an increase, a little bit of a dip here. If we zoom in, we can see that it dipped down yesterday. So it's been dipping. So people are starting to say, okay, like maybe the bottom isn't in yet, but we haven't gotten into that negative where they're starting to short. Looking at some other on-chain, let's just go through Bitcoin spot volume. We can see spot volume continuing to increase. The sells and buys total is 11 billion. So spot volume is increasing. Why is it increasing? What is causing it to increase? Well, let's look. Let's look at that spot volume. Well, the ETFs use spot volume, and we could see that the spot volume is increasing as the ETFs are selling. They are flowing out. They're saying, no, thank you, not today. So a little bit, we saw that bounce. I told you, said, don't buy the bounce, your exit liquidity. Some people in the ETFs tried to catch a fallen knife, bought the bounce, and then they said, whoop, I'm wrong, quickly. And then they sold. They just sold. Fear. If we look at the aggregate volume, that's what we already talked about there. Here's another thing that's causing that spot volume to increase. So we can see here that revived age. This is the revived age. So this is the coins that were dormant that are coming back into supply. We have the different year ranges of that old supply. This is the short term holders. The 6 months to 1 year. These are some of the longer term holders. So if we look and see what happened recently, we could see that it is increasing. We are seeing that 1 to 2 year. They're stepping in. They're saying, okay, I'm going to sell. As well as we could see that we saw a spike in the 2 to 3 years, a spike in that 3 to 5 years, and we saw that those 10-year people they left a while ago. Bitcoin. Let's see, right? July when we started the distribution it was around July 14th. So we had that week breakout, no follow through, and then July 14th. If we look at that on-chain there. Not that one. This one. Look at that on-chain there. July 14th. They started early, so they're like, okay, we're paying attention to this breakout. And then they said, we're out. And then you can see that they got out. Exit liquidity. What can I say? And it's cool that the on-chain also shows us that. So, realized profit loss. So this is saying from all the coins, this might be the short term. I need to get clarification on the time frame for this, but we can see that the realized loss is increasing. The realized profit is continuing to decrease while realized losses is increasing. And this is a chart that shows you. I like to look at this because we can see the short term holders. So this is that 6 month, the 6 month holders. So these are the short term holders that make up the majority of the market. They are so these are more your active traders. This is your degenerates. The futures market. This is all that short term, and we can see that their cost basis is around 109K, and we are quite a bit below that. We're going to this what's called the true mean. I'm not super familiar with the true mean. From what I understand, it's like the total amount of coins in circulation, and it's like a spread out over the course of time. And there's something to do with about Satoshi's coins because he holds a large amount, and and this kind of creates the true mean. And some people that are on chain are saying that this could be a bottoming area of that true mean. But we've also seen it go below the true mean, so it's not a super reliable indicator of a bottoming. As we could see, the short term holder cost basis was it's just more of telling us where. I like to look at this not as a necessarily an indicator of where we are or where it could drop, but just more of the psychology of holders. And if a bunch of people are underwater, that can continue to accelerate. That's just what I like to look at it for. Already talked about all that, so yeah, that is the update for today. It's Friday. I'm not going to make these videos on the weekend, so we'll just have to wait and see. But this is still not looking pretty. What I imagine. So if I was to speculate on what is going to happen, I would imagine that because we had this liquidation event, this liquidation cascade, all of those longs got liquidated. I would imagine that price squats here, resettles, and then more people start saying this is the bottom, this is the bottom, this is the bottom, and then bottom fishers try to come in. More futures degenerates come in, try to drive the price back up. But smart money, people that are just saying the cycle's over, this is it, or hey, this is my opportunity to come back in, like it's coming back up to that 90K, I'm just going to take my profit and bounce. And then you have just another cascade, and it drives it even lower. An area that we might be looking at of interest could be this 75K range. The reason being is just because it's a pretty good support over here. We saw it double out. We saw it testing this area. So I'd put this as that 75K range, 75K support. And then if we lose this, maybe we go back to this choppy area. Who knows? I mean, this would be the next logical area. Or we just kind of float around here. But so yeah, that is my speculative of what could happen. But we're waiting for this. We're seeing the trend until we see those stage 3B signs or stage 4B signs. We're still in stage 3. How low can this go? I don't know. But yeah, that's about it.